The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more, we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And I guess. And what do we have out here? Well, if you listened to my show a week ago on Monday, I suspected that the low was going to be in before this week and that we were going to melt up with a lighter volume and short squeezes. And I think we can probably say from yesterday's volume that we certainly have a lighter volume. Today, I suspect that the market went boo, and the shorts are covering, up 25 points on the S&P cash at 2073, 2.24 billion shares, which I think we started off a little under 1.9 billion at this time yesterday. So kind of at the high end of our little trading range we've had here for a while. But my guess is that we kind of just melt up until Friday and the three-day weekend. If we are going to have a big collapse in the market, my guess is it's not until we come back after the three-day weekend. And I guess that hasn't changed for a week. I continue to think that that's what we were going to have. Even some of the biggest dogs out there are shedding a few fleas today and going higher. GoPro's even up 5%. Netflix is up 4%. And people were just a couple of days ago saying it was a day away from going to 40 or 50. So very, very light volume. Too many people shorting into thin markets. And why the old adage, do not be short a quiet market, is exactly why you shouldn't be short a quiet market. Thin volume makes it tougher for shorts to push a market down. And, of course, a rising dollar is confusing, I guess, many people. The dollar index is up 38 cents today at 95.61, solidly looking for that 90 or 96.30, which is the top range of that dollar index. And if I saw a nice little pop out here in the dollar index just in the last, we'll call it 15 minutes or so, because a very strong market for bonds where we saw it tick up to, I think, 190 on the 2-year. So pretty decent strength going the opposite way that the bonds have gone for a while, and maybe signaling that we are in for a rate hike. I thought there was no chance they could do it, but we're getting more drum beats. Now 4 Fed presidents are out actually saying that they need to raise these rates. Is it all a smokescreen? Will it be the boy who cried wolf come the 15th of June? We shall see. In the meantime, give me a call, 877-927-6648. Email me at path@tfnn.com. And as always, time to get a little history, and then we'll talk about some questions that we had yesterday that I didn't have time to get to, and other things.
That it's all just a little bit of history repeating.
It is all history repeating, and the oldest known book on the stock market was written by Joseph Pinso de la Vega. And boy, I bet he's still spinning in his grave having a horrible car from Chevrolet named after him. The Chevrolet Vega. Whoa, what a steamer. What a horrible, horrible car. Anyway, was a Chevy Vega. Yeah. They had a Cosworth Vega. They had a good engine and a horrible car. Didn't change much. Anyway, the book is called Confusion de Confusiona's, Confusion of Confusions. His anecdotes, pretty much of the Amsterdam stock market and exchange, don't read that much different than they do today. And what else are we talking about? He says when speculators talk, they talk shares. When they look at something, it's shares they see. If they eat, it's the shares are their food. And even on their deathbed, their last worries are the shares. The speculator fights his own good sense, struggles against his own goodwill, counteracts his own hope, acts against his own comfort, and is at odds with his own decisions. Other things happening today, a lot of different stuff out here, but that is the most interesting. Hey, a little company called Quantum Computers opened this day in 1985. That was America Online because they changed their name. And in 1973, the Stock Exchange of Singapore was founded. Actually became a deal here in the last 10 years. Jesse Livermore, of course, brought that to a head, and where I understood this to be one of those undeniable truths of life. He said in his in some articles that he had in the equivalent of the Wall Street Journal at the time, another lesson I learned early is that there's nothing new in Wall Street. There can't be, because speculation is old as the hills. Whatever happened in the stock market today has happened before and will happen again. And a gentleman even knew that in the 1600s, and that nothing is new. Here we are almost 400 years later, and nothing is new. Mr. Zuckerberg had to announce last night that he is sending employees out for retraining. And to get their heads right, it defends itself against charges of political bias. We told you that as soon as Mr. Zuckerberg had said that there was absolutely no problem with his company, that documents came out of The Guardian and had them dead to rights. They've got a senator that will probably drag him in front of their committee this summer. But it's awful tough when you get your hands caught in the cookie jar, and especially when you're actively going after politicos. I wrote in my Tech Insider that the one thing, if you're going to kill the king, you better kill him the first time. You better not let him up. And unfortunately or fortunately, a lot of Silicon Valley has turned into a political party. The question is whether or not they can kill the king before he is knighted. Is he knighted? I think he's, what is the king? He's actually throned. What is he? Well, anyway, we don't have any kings here. I don't need to know it. Anyway, basically what he is probably going to have to find out by political witch hunts throughout the summer on this issue. We all know that bias is everywhere. The only thing you can say is that you have no bias, and then you're either a liar or you're stupid, one or the other. Anyway, I'm probably going to see a little political theater on this, but they got him dead rights. It's going to be very hard for him to weasel out of this. Little political correctness is coming up, though. We'll get into other things when we come back. It's Gaga for white goods, and I don't mean me. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Best Buy was out with its earnings this morning. They're off, about 7%. They guided down on the technology part of their business. The bright spot, though, was the sales of white goods, refrigerators, washers and dryers, that kind of stuff. They took over a huge amount of Circuit City's business when they ran them broke, but it never really turned anything. My guess here is that, one, sales are up, but two, probably showing you the end of the market for Sears, and maybe the end of road for Sears, as many people will not go to Sears anymore. I feel like I need a tetanus shot just to walk in their stores anymore. But I think they're getting a little bit more. But sales overall, when you look at Whirlpool, they had some good news out. Whirlpool's up 4% too. They are saying that people are buying a lot more white goods just as of the last 30 and 45 days. So pretty good business out there. Whirlpool has been up in this range for a little while. We'll look at the chart later when we get time. Best Buy, of course, was at $30.90. Been moving around here. Sales of the 4K big monitors, not really setting the world on fire. Probably the only other good ray of hope for Best Buy was that computer sales were marginally higher for the first time in many years. Thanks, Fletch, for sending me that article. But I'd been seeing some other ones that looked like maybe it was time that people were buying some new PCs. Interestingly enough, I got a computer for a brand new one, by the way. Someone sent me. It costs $10, literally $10 brand new. It's called an Orange Pi. Has HDMI. It has 3 USB ports on it. You have to still put in a memory chip in the thing, but you can get one of those for $16. And some other issues, but literally for $10, when you look at the specs on it, it's pretty much like a computer that I had in about 2008. Pretty much the same power. It's always amazing how fast things move. There are a lot of these single board small PCs out there, Raspberry Pi. There's about 14 Pis out there. This one is an Orange Pi. Not a lot of polish on it. Only runs one operating system so far, but these things are pretty much in the line of anywhere from 10 to 35 bucks. And even the Raspberry Pi with 35 bucks gets you Wi-Fi in it. These things run some variant of Linux in them, and they're fairly snappy. And if you didn't need a lot, they can actually do the job of a small PC. Your biggest expense is a keyboard, mouse, and a monitor, maybe some speakers. But the very low end of this business is very hot for the PC business, but not so much for Best Buy. They also said that sales for Microsoft's Surface tablets were fairly good. So a little bit of that out there. And that is it. We're going to go to charts fairly quickly. I'd been looking at a lot of them that had been moving higher and wanted to see. A lot of these things were right on the cusp of failing and coming down, but we'll go through a few of these. I put them in the newsletter this morning. Wanted to see how some of these were doing. Agilent Technologies coming back up. Let's see if there's anything on these. In fact, let's turn on the little 9-day out here and look at some other ones. That's what I wanted to look at. Some of these look like they were just about ready to maybe pull back underneath it. Agilent, a little bounce out here, but still above it. These things have been on a tear since February 9th, and many of these have not failed yet. A lot of them have. Albemarle, I can't even say it, Albemarle, is it? Corporation, ALB, another one that's just been on a tear up basically 50% since it got above its 9-day moving average, and that was back on the 12th of February. Some of these just continue to run, not a lot of juice except in these gaps when you get some volume, but kind of interesting to see some of these. I was wondering if any of these would dip down today. Of course, on a big move higher, looks like they continue to go higher, and some of them, like A.O. Smith, a maker of water heaters and other kinds of supply stuff for houses, actually even looks like it's breaking above its previous high. What you would really like to see is about 2 million shares from that July 23rd, 2015 high, but it's kind of hard. But a nice little gap up. Volume is okay on a day where volume is not all that great. 700,000 shares already, but I think you want to see this thing with about 1.2 or 1.3 million to get it to stick. And any pullbacks after this would be highly problematic. You don't want this thing closing again under the 9-day moving average, or we could see this one fall apart. Red Pharmaceuticals, another one back up into these big spikes and gaps. This one kind of just dipped its toe in the water with this gap that comes in at about 825. And energy on the way back up, okay. But just watching a great deal of these that have been moving higher for a while without any significant pullbacks yet. Don't know much about this other company, Broadridge Financials. BR is the symbol on this one. It's been pretty much on an upswing since the 10th of February. You get 1 day, maybe 2 days under the 9-day, and these things are popping right back up and continuing. This one, of course, moving a little higher out here today. But normally, kind of like gold, when you get such a huge run out there and you don't get the kind of pullbacks that you need, you get a huge range on the pullbacks, and why I'm watching these so closely. If I can just get some 50% moves on these stocks that people don't think can pull back ever, you can make some quick, cool cash. And you know what you have when you have a lot of that?
He's got money coming out the wazoo.
What do we have?
Money out the wazoo.
Yeah, I'm looking for some money out the wazoo in these. Cadence Design System, another one This thing has been kind of on a tear since its low back on January 20th. Never has had a significant pullback either. And again, up. We're going to be watching the volume on these. But eventually, you're going to have a decent pullback out here. This one's up on 3.3 million shares today. When we look back a little bit further, what you really wanted to see was a breakout with about 10 million shares, and never really got that. This thing has moved higher. So there are some suspect stocks that are continuing on a tear. Some of the other ones out here are Charles River's Laboratory. Last couple of days, it's been going up against its previous highs. Some of these have had a little pullback, but nothing significant, and that continues to be problematic. But still above these things. They are not breaking. Well, we're going to break. When we come back, we'll look at a few more of these. Then we'll get into stocks that are giving some signals. In fact, when we get back from the break, I had a question yesterday about viruses and PCs. We'll talk about those shortly at the top of the next half hour. It's the bottom of the hour, right? Yeah. Back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
ADM, supermarket to the world. I was going to talk about, I had a question yesterday about virus protection and PCs. But that What's going on? I don't know what's going on. Just have people putting ambiguous messages that I have no idea what they mean. Anyway, we've got, I was going to, I think I might have had an aneurysm. They had a caller yesterday. I guess he didn't hang on. Wanted to know about virus and virus checkers for PCs. There are a lot of stuff out there every year. Consumer Reports does a big test of them. The biggest thing is there's a trade-off to how slow they make your machine, how well they work. But I've pretty much distilled it down to one thing, and that is Avast, A-V-A-S-T, is the one that I use and choose to use for a while. It has a free version. It has a pay version, too. There's you get a firewall and some other stuff. I have a firewall and the router that I use, so I don't need that part of it. So I can mostly use their free version. And of course, some of the things, nobody makes one product that gets everything. So the other one is a product called Malwarebytes. You probably want to take a look at those. But I've been using those together for a number of years and have never seen anything that has been an issue other than those two. And of course, not doing stupid things like opening up emails with attachments from people I do not know. And of course, I don't get any invoices, so most of those are pretty easy to wander by. Polar Y, both at the same time? Yeah, because actually Malwarebytes is pretty good about removing some, and Avast is pretty much kind of the shield of making sure you don't get them in the beginning. If they make it past the Avast, then probably Malwarebytes. But it is a belt and suspender approach to it, and I use both, and it's kept me virus-free for a long time. Archer Midland, Daniels Midland Supermarket to the world. What do we have? A nice little gap up again today. And, of course, last 4 or 5 days has been nothing but sunlight and sunshine and rainbows and unicorns for Archer Daniels Midland. We've talked to Andy Heck a few times. I talked to him, Wednesday last week, and on Tom's show. A lot of good stuff happening in the ag sector out here. But the question is this too much of a good thing? Chart-wise, it certainly looked like this thing was going to come back up, at least to this big gap down with heavy volume, and that's where the heavy sledding is starting, which we're into today. But that gap down of November 3rd that had almost 12 million shares is what you're getting into. We've got about, 5 million shares so far today. So keep an eye on that. But it may be just about all you could hope for ADM. We talked about Best Buy. Let's take a look at the chart real quick. Most electronics sales are down. White goods are up, which is probably the one bright spot out here. The sales of the 4K and 8K screens, we talked about a lot of the different problems, the two different standards for DVD players. We've got, of course, Samsung on one side, and we have, what's the name of the company? I've got their TV. I'll think of it in a minute. Anyway, we got two different factions on black levels and DVD players. That all hadn't been sorted out either. The question about whether or not you're even going to be able to get the high-res or high-definition TV signal for the Olympics is a little fuzzy. And I think maybe if this is going to be a story, it's going to be a story for Christmas for the 4K and 8K TVs. Just not a lot of business, at least from what Best Buy is saying. For me, going in their stores, I go in every couple of weeks on a Sunday, kind of look around and see what people are interested on and put my hands on stuff, play with it, just so I kind of know what's going on in the industry, at least for consumer retail. But down, heavy volume out here. I don't think that there's a lot out here that says that Best Buy probably didn't come down and kiss this $25 level from the high volume low back on January 15th. and then maybe see stuff move. Of course, you probably, when I say a Christmas story, probably a good thing. Yeah, LG and Vizio. Vizio runs the other segment. I was trying to remember which TV I had. Vizio and Samsung are the two major factions in the Game of Thrones. Both of them are fighting over very small differences in the standard for those 4K and 8K DVDs and DVD players. It has mostly to do with the black level and whether they're using organic LED technology in the background. But if you're going to spend $2, $3, $4 grand, you probably want to wait until you see the dust has settled on this issue. But we and I have wandered off the path here. Anyway, Best Buy down. If this is going to be, in fact, I think somebody said something in the den. Just remember that if the story is going to change for Best Buy, that you probably have to buy it before the story leaks out to the press. If I say something is a second half story, remember the market tends to be anywhere from 6 months to 9 months ahead of what everybody else actually sees. And if I say something is a second quarter story, means that we're probably, a second half story, we're pretty much already there. You got to lead. It's kind of like shooting a little skeet. You got to lead a little bit ahead of the story. Belt and suspenders. Actual video I'll have to watch during the break. Anything else out here? That's it. Gold futures are down, so the usual suspects are down in that. Same thing with FCX. NDSM. Is it M? NDSN. Beat on Q2 with a $1.23 versus 92 consensus. This one is a very interesting company. I'm going to bring it up so I do not get it wrong. It's kind of like we're reading the Miranda warnings to a guy. You got to read it off the card. Nordson engineers, manufacturers, and markets product systems to dispense and control adhesives, coatings, polymers, sealants, biomaterials, and other fluids. Non-bodily. It's adhesive dispensing systems, coatings, laminates, lotions, liquids, fibers. Well, sounds like they do it all. This is right back up to what has been severe resistance. Looks like it's got the volume, looks like it's got the escape velocity, and it's over many of these highs from June 9th, May 19th. A valid breakout, at least looking that way. We'll be back to talk more about this in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we got Vic from Germantown, Maryland. How you doing today, Vic?
I'm doing great. How are you?
Another sunny day in paradise.
Well, we had a week of rain, so we do have sun today, so it's certainly welcome.
Yep. What can we do for you?
I just wanted to see if you had an opinion about 3D systems, DDD, and the chart.
You know, you got to like the last 7 days where this thing has just gone sideways. I was looking at it. The biggest problem was I disliked that it couldn't rally. As we talked last week, on none of these really started to rally on the big rollout of new products. Was it last week or the week before? In Orlando at the big convention, they have a kind of a big thing for CAD CAM and 3D printing. It's, you know, normally you got something that moves a stock like that, some news. They really didn't have anything new. And it's going to take probably a little catalyst. Were you the one that called me and asked me if it was coming back down to this level?
No.
A month ago?
No, I just saw somebody else I follow had it on his chart list, so I was wondering whether it was accumulation on the low end here.
Yeah, I mean, you got to like that part of it. The part I dislike is that they've got, you know, you got this kind of retracement back here, but, you know, even that little retracement, I would have liked to seen it bounce on the news of new products and then maybe come back and do this kind of sideways action out here. You kind of had a huge run off this $6, which, man, they just ran the dogs out of the Dickens out of the shorts out here up to 1976. I would like this thing to just kind of do what it's doing now for a little longer. It's not saying this thing couldn't start rallying right now. Could it go back up to 16.5 where that little gap still exists? Yeah. I would just like to see this thing consolidate and everybody kind of ignore it for a little while. That's kind of the best thing for these stocks is to just lose all interest. And that's what I really like about, and I know why someone's got it on their chart list. It's these days from May 12th out here to yesterday, where this thing just went sideways. It looks like a accumulation to me. I looked at it intraday though, and it just wasn't popping off the screen like some of the ones that I have bought. when you actually go in and read the tape during the day. It's I'm not going to say it's a bad trade, but I'm thinking that maybe 16.5 is what that has in it. If this moves off of it, I would rather wait and buy this thing if it continues to just bore everybody to death. But generally, these stocks that have come from like this one, $97, down to $6 or something, they just don't instantly turn around and rip. HP, of course, came out with their new products at that convention, and didn't really help nor hurt HP either. Really kind of tells me that no one's really paying attention to the sector, which I like. But at the same time, if you can't move it, you need. Jesse Livermore in his book said you need an advertisement of a bull market in something, and not just a reaction off the lows or too many people piling on short to really get a huge amount. But the question I guess I would ask you is, I look at this as some kind of long-term investment I want to buy, or are you just looking for a trade?
I'm just looking for a trade.
Okay. You got to like that. I like if these things can go 10 to 15 days sideways as a much better indication that you've got somebody underneath there buying it, and it's just not a neglected stock that no one's paying attention to. So I like that first 7 days. You get me another 3 or 5 days out here with this thing unable to go lower, and I think maybe you got something. You certainly will have your back to the wall. Today, you had a little candle. Volume's not much into it. I would have liked to seen a little bit more volume today. Let me put it that way. That's why I'm thinking that maybe you get 4 or 5 more days of sideways action like this. Not too bad. But is it ready right now? You may just be getting a little bit of shorts covering going into the weekend. If you don't see any volume come into this thing, are you already in it?
Yeah, I bought some about probably $0.50 down from where it's at now. So I think you're safe till Friday. Just too many people short everything.
On lighter volume, you can watch this thing. But man, you want to see some volume within about 2 or 3 days in this, or you're probably just going to come back down on that. Could you get $16.50 out of it? You can if they can get a short squeeze on this fired up yet again. But I don't know. There's $3 is a good trade on this. I've got a much longer view in this sector, and I want this thing maybe to do a few different things than you want. But it doesn't look bad.
Well, so longer things meaning that 5 years from now it'll be a viable industry that's got a lot more legs to it than it has at the moment.
Yeah. I would like to buy this thing and hold it for a couple of years now that it's been beaten down and reality is kind of set into this whole industry. I just need to get it at the right level. And, I got 7 days out of normally what is about 15 days of sideways action going. So I'm not betting against you, but I am rooting for more sideways action because I'd like to see this thing just go sideways for a while and really make a nice long-term buy out of it. This is you got kind of a short-term buy out of it. But, man, you need some volume probably before the end of the day to really get some juice in it. But I don't know. There's no risk trades, but this is a very low-risk trade all the way through Friday, I suspect.
Yeah.
So it won't hurt, right? So you can sit on this all the way through Friday and see if you get a little short squeeze out of it. My guess, though, is it's probably coming back down to this level after and maybe into the next week, unless you get that sideways action. So you're good for you're good for the short term. If it does nothing, you may even be better on the long term.
Well, I listened to you last week, and I believe this is just where you had thought the market was going to end up towards the end of this week, was somewhere in this range. And are you thinking this is more short squeeze oriented or just?
Yeah. I mean, I was looking at all kinds of stocks, including like Netflix, and everybody It's just, I mean, 30%. We didn't have a lot of volume, and 30% of shares every day were instigated by short sellers. Just a lot of people hammering on a market, and declining volume is always a good way to look for a short squeeze. Going into lighter volume, 3-day weekends, always problematic. The same thing that happened at Christmas, which might be setting up, Yeah. No volume, kept moving, and then you come back after the vacation and boom. So I'll be watching for that.
All right, well, good luck to both of us.
I hope.
All right, thanks, Dave.
Yeah.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And good question in the den. And I don't have the answer yet, but I will tell you the characteristics of what's going on. And the question is the boom after the vacation downwards? And the answer could be yes or no. But what normally happens is we get a lot of information over the next 3 days in trading. And that is we're going to have lighter volume. I think that's a given. Most people during this time, their thoughts are to having a long 3-day weekend, going to the lake, getting their boats hitched up if they're up north, go take that first big summertime vacation, maybe go down to the summer home or take a trip to Disneyland or something. You know, everybody's driving, everybody's going somewhere. And that starts to affect people starting about on Monday of this week. They're thinking about everything other than trading, and volumes continue to go down in the weekend. If you are bullish, what you want to see is the market kind of pull back on light volume all the way into Friday on the lighter volume each day. If you are bearish, what you want to see is this market continue to creep higher. And my thought is that second scenario is what is setting up, and that is that some of these stocks are just moving up on huge short interest with declining volumes, a marriage made very tough for a shorter. You need higher volumes to continue a market lower. Lighter volumes become very problematic. Even if you do move lower, there aren't a lot of people selling, so you can't push it down. There are some conditions when you can have some very light volume and nobody on the other side, but normally those happen during crashes. They don't happen in the kind of market activity that we have right now. So that's kind of where you want. You want to start seeing, if you're bearish, you want to see this market move higher into Friday on very light volume, and then you want to see some sign of weakness come Tuesday. But if you think about the psychology of it, if you're short right now and the market keeps moving up a little bit each day, maybe you're not losing a whole lot, but you go ahead and cover. And of course, that makes other people cover because everything starts moving up. Now you get into this kind of crazy position where a lot of the shorts have covered. If you do get the market moving down, there are not those shorts to be the natural buyers coming back. And the very light volume into the 3-day weekends across the summer, you can go back 20 years, it's done it. I think that there are organic reasons, as I explained, i.e. everybody's thinking about stuff other than trading. Traders that have been around for a while know it's lighter volume. They choose, like me, to be gone on Friday, and I will be gone on Tuesday because there are very light days. But, you know, if I'm going to take a vacation, this Friday and the Tuesday after are the good days to start doing it. I'd have to have something really big happen on Friday to make me think that coming back on Tuesday was the deal. I'll be back for the show on Wednesday. But these are, you know, these 3-day weekends are generally fairly key, set some high and low water marks across the summer, and are very good times to look at this kind of stuff. But we'll talk more about it tomorrow. But I think you're going to get a lot of information. Do we continue just to slowly move higher with lighter and lighter volume each day? That would be bearish. If we kind of start pulling back after today, options rollover is over today. If we start moving down now, much lighter volume into the weekend, maybe we set up another move higher when we come back from the 3-day. In the meantime, sell when you can, not when you have to. Be here tomorrow, same bat channel, same bat time. Hang on for Tom O'Brien in the next 2 hours, and then Andy Heck in the 5 o'clock hour. See you tomorrow.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.